The real estate market has been cited as one of those concerns that we could be at the peak of the market. Is it fair to say the real estate market is showing cracks right now?
Good morning. Thanks for having me on the program. Well, if you look at the appreciation of homes in the top 10 markets in the last 12 months, they appreciated by an average of 14% versus a national average of just about 5%. So there's clearly overheating on the prices going on among certain markets. As a whole, the good news is that the housing industry or the real estate, residential real estate industry is performing very well. There is no sign of troubled loans like we had in 08 and 09. There is an undersupply of new construction. That's part of the reason prices are going up so much. But it really also speaks to a lot of changes in consumer behavior. People are preferring to rent. They're still concerned about what happened in 08 and 09. They're preferring to chase jobs that require more mobility. And so the apartment rental market has shown tremendous strength, while housing is becoming less and less affordable on the single-family side.
Hessam, are there places specifically within the U.S. that are showing more signs of stress than others?
Clearly, there is a bifurcation of markets, and it has to do with jobs. So if you look at markets like the recent slowdown, for example, in New York Metro in job creation, they're still adding a lot of jobs, but it's less than it was a couple of years ago. And with some of the tax law changes that are not very favorable for housing in very high-end markets, New York home prices have come down, for example. Philadelphia, Milwaukee, other examples include Austin and Houston, where we've got a much slower pace of appreciation, not so much price declines. And on the other side of the ledger, you have a lot of the coastal markets like Boston, like up and down basically the West Coast from Seattle to most of the California markets, where you have very rapid appreciation of home prices, pushing more and more people into the rental market.
Is this just a rebalancing? Are those coastal cities and their downturns in prices filtering out into maybe upticks elsewhere in the United States?
You know, that's kind of a generalization. It's not a clear trend. You've seen markets like Texas that grew right through the recovery in 2010 through 2015 at a very rapid pace. Markets like Denver, for example, that have performed extremely well. And then you have the recovery markets like Las Vegas, like Atlanta, like Phoenix, which were hit very, very hard during the downturn in 08 and 09, and now have been creating jobs, and they're not overbuilding. The key trend here is not overbuilding. But one of the most important trends here is that the American dream is as much about finding a great apartment near a great job where you don't have to commute or get in a car as it is about buying your first-time home. So the macro trend of first-time home buyers now accounting for much less of home sales than they were historically is a very important indicator. The fact that that entry-level home is now a little bit less favorable because the tax law changes with standard deductions now much higher. There's less incentive to buy entry-level homes. So you've got the sort of supply-demand rebalancing, but more importantly, you've got some consumer behavior changes too.